presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compac Market Wrap YouTube update for May the 12th, 2025. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. First of all, a friendly reminder, just make sure you click on the subscribe button so whenever I post an update, you will be notified and you can watch it at your convenience. Looking at the numbers, last week market sort of waiting and watching to see what happens. 0.245 lower for the S&P, Dow down 0.14, NASDAQ down 0.25. The Russell was up slightly, and the EFA flat, and emerging markets up. So a very, very quiet market last week, waiting to see what happens from this weekend's talks in Switzerland between the United States and China on what is going to happen to the tariffs. And we got good news. Finally, the tariffs, they did come up to some kind of agreements to lower the tariffs, at least for 90 days, and bring those down from 145% to 30%. And that is a big move to make sure that we're talking. And that seems like we are going to come. I still think there will be some tariffs that will remain in place as far as China is concerned. As the Treasury Secretary said today, and that Basant, that we are going to gradually decouple from China. That is overall what is going to happen. But it'll take a lot of time to move the factories that are in China, to find other supply chain suppliers that can fill that void, that if we shift production from China, and then we will still get some stuff from China that will be at a higher price. And that, I think, will slightly push up inflation for the short term. But as I mentioned last week, the big question now is going to be the big, beautiful budget bill, as the president calls it. What is going to be in it? How much do we get in tax cuts? How much do we get in spending cuts? And how much is the deficit going to be? Those are the big questions. I think we are going to get some stimulus in this bill, where we are going to get some middle-class tax cuts, which should help the economy. So the slowdown we get from tariffs will be negated, or at least we'll get a boost from the tax cuts. And we'll see where they land and how much we get for the middle class, and how much we increase taxes for the upper class, or if that happens at all. What is the makeup of the bill? We're just starting to get some of those details today. A lot more will come out this week. And I think that's, as I mentioned last week, is going to be the focus. I think the trade is going to fall to the background, still there, but it is slowly being negotiated now. And we're starting to see going back to what the market expected, about 10% tariffs across the board. That is what the market was expected before Liberation Day. We're not there yet. There's still a lot of negotiation to be done, especially with the European Union, especially with some of the other countries, but we are starting to see some deals fall in place. We had a deal with the United Kingdom. Looks like a deal with India is going to get done. Then I'm sure some other, Japan and Korea will come online. European Union and China are the two other big ones that we have to get resolved. There's some progress being made on China. That is why the market exploded to the upside today, gapping above some very important technical resistance areas. And I'll talk about them when we take a look at the charts. Right now, last week, the best sector was industrials, worst sector healthcare. For the year, S&P now, it was down 3.3%. We're up about 2% today, 2.5%. So market is down about 1% from where we started for the year, the S&P. All of the hoopla, all of the pullback, and all of the worries that we had just a month ago seem to be now fading to the background. Everybody now is starting to refocus on what is the economy is going to do. Everybody is running around saying there's a recession is coming. The chances are still high that we could get a recession, but gradually as we negotiate these trade deals, the chances for a recession continue to come down. Looking at oil, it was down big last week, but the president is headed to the Middle East today. I expect some deals to be announced with Saudi Arabia, where they could buy a lot of our defense defense products and some other products. So overall, it'll be a big announcements on deals being made in the Middle East and what they're going to buy from us, and that should also be helpful. Looking at the 10-year Treasury, it was slightly higher, up from 4.33 to 4.37. Still stuck in the range. Nothing dramatic in interest rates going on. I think nothing happens until we get a clearer picture on tariffs and the budget resolution. What is that going to look like? Looking at the market growth, if you look at the Mag 7, it came down. This was what we were seeing since 24. It was going straight up, but then it sort of plateaued. In 25, came down dramatically, and now we've come back up. That's what we're looking at. The rest of the S&P, if you're looking at the S&P 500, it was down big, as you can see, and so is the 493 stocks. They were down even bigger. So what we're starting to see is estimates of growth still there. I mean, look at the S&P, year-over-year growth, 17% for the Mag 7. You look at the S&P 500 overall, but if you look at the 493, they're about less than half of what we're seeing in the Mag 7. That's what we're seeing in the S&P. It's only at 7%. FOMC held the interest rate. Nobody expected any change last week from the Fed. Still in the same rate. ISM came in a little bit stronger than expected, which is good. CPI comes out tomorrow. Or we see what that looks like for the April, expected to be up 0.3%. Initial claims, we get retail sales. So we do have quite a bit of housing starts we're getting this week also. So we should get a lot more economic data this week and get some better idea of hard data where that is looking like. Looking at the market today, the big news is 5750 is the 200-day moving average. The market is up here today at 58.23. Last when I looked at it, way above. There's a huge gap that the market left from here to here. This seems like Friday's close was right around 56 and change, and now we're above the 200-day moving average, and that is a big, big move to the upside. Is this a breakaway gap, or is this just exhaustion gap? I think it's more of a breakaway gap. We could see a pullback to that 57.50 area on some little pullback right here down to the 200-day. But seems like we are starting to see some move. We also have a gap here. This was the breakaway gap. And this could be some more sideways filling as we have come up a lot from where we were at 4,800 to 5,800. That's where we have come up to, that big move just in less than 3 weeks. So all of that decline that we saw after Liberation Day, after the tariffs were announced, are all come back as far as the market is concerned. Also 5706 is the number we're looking at, is the 50-week moving average. We're at 58.24, so we're way above that right about here. And we're at 57.62 is the 20-week moving average. Again, a gap higher on the weekly gap higher. That is a big deal. You don't see weekly gaps that often in the market. So if we do not fill this gap, then that would be a big move, big breakout to the upside, which I think we have. Same thing in the NASDAQ, 18,321 is the 200-day moving average right here. We're at 18,640 this morning, and the market is right up here, gapping above the 200-day moving average. All of this technically very positive, but backing and filling, we might get a little, but I would view that as buying opportunities. Looking at the weekly chart, big change here. We hit my dot plot, and it has turned positive now. The market is here. The dot is here, so it's below the market now. 18,275 is the number for the 50-week moving average on the NASDAQ. We're at 18,637 today, up nearly 4% for the NASDAQ. So big, big move from where we were down to about 14.5. That's where we were, 14.6, right about here, just about 4 or 5 weeks ago, 6 weeks ago. And here we are at 18,637 right now as I'm doing this update on Monday morning. Looking at the 10-year, still in that range of about 4.5% to about 3.8, just going back and forth and back and forth, back and forth. And I think we'll stay here until we get more clarity. But as long as interest rates stay where they are right now, I don't think rates are going to be a problem. Gold down big today, about $115 an ounce. This seems to be a third wave. Fourth wave could take us down to the 50-day moving average, which is 31.44. We're at 32.29 this morning. So just a pullback in gold. And I think as long as we see the trade that come down a little bit, that would be good. But we'll see what comes out of the budget bill, and that will have a big impact on the market also. Crude oil, after making a low, popping back up a little bit today. The president, as I mentioned, headed to the Middle East today. So we'll see. I think that'll give some support to the oil market. Those are my thoughts. Again, if you need help with your portfolio, as we said 6 weeks ago, 4 weeks ago, if you're concerned about the market, give us a call or just send us an email at invest@compact.com. We will be more than happy to help set you on the right path so you don't get too anxious when the markets are going down and don't get too euphoric when the markets are going up. That's where you have to keep calm, and that is the hard part to do in these markets. Keep your emotions in check. Again, if you'd like to get help, 800-388-9700, 800-388-9700 is the number to call. We'll be more than happy to sit down with you. Initial consultations are free. There's no cost or obligation for those. Those are my thoughts. Those are what I'm looking at this week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.